This video is about Alibaba and why I have 1 billion more reasons to be bullish about the long-term future of Alibaba. If you're like me, your portfolio has been taking an absolute beating.
23-pound weight advantage.
Looking at it will only tempt me to do something really stupid, so I avoid it.
In my life, I try and avoid things that are stupid.
While I wasn't paying attention to my portfolio, I got some good news about my beloved Alibaba stock. Alibaba released their quarterly earnings. Alibaba's earnings exceeded Wall Street's expectations. That caused the stock to skyrocket. I want to share with you the details that I find to be the most interesting or the most exciting, and we'll conclude with a time-tested investing lesson that hopefully you can use and apply and benefit from. Sound good? Let's get into it. Oh, and please subscribe. So as Reuters noted, Wall Street analysts said that Alibaba's Q4 showed that the company was more resilient than they expected. Shares of Alibaba soared 15% on the news of this revenue and earnings beat. Alibaba's CEO, Yang Zhang, noted that we delivered healthy results this quarter with revenue growth of 9% year over year, and total revenue for the fiscal year grew 19% year over year, despite a challenging macro environment. And I would say that's an understatement.
So is locking down almost 25 million people.
Mr. Zhang continued, "We will continue to execute on our multi-engine growth strategy by strengthening our digital infrastructure and focusing on quality growth to create long-term value for our customers, shareholders, and other stakeholders across our ecosystem." Now, what I find most interesting is the fact that Alibaba successfully hit their target of 1 billion annual active customers in China. Amazing. And that fits this bigger growth hypothesis that Alibaba has a huge advantage by capturing the market share of all people in China who have purchasing power. As I mentioned in my last video about Alibaba, retention for these new customers is equally as high as it has been in previous years, which shows me that this is quality growth and that in fact this large, massive customer base, there's real stickiness here. Now, that doesn't guarantee the future, but that's something I look to see in any e-commerce company. Let's get to the time-tested lesson. It's all about expectations. An investor I've learned a tremendous amount from is Michael Maubausen. I found an old interview of his that I saved a clip of. I'll include a link in the description. Which qualities lead to share outperformance over a long period of time? Now, what could be more of a relevant question for us to want to answer as long-term investors, right? If you're going to buy individual stocks, and I'm not even saying you should, you want to find something where you're going to get outperformance over a long period of time, meaning the performance of that stock is going to do better than the average of the market. There's no formula. The excess returns for high return on invested capital businesses are not exceptional because the market knows they are high return on invested capital businesses. The best answer is that the stock starts off with low expectations and then consistently delivers results better than what the market anticipated. A good example of this would be when Warren Buffett and Charlie Munger first took a stake in Apple through Berkshire Hathaway's portfolio. At the time, a lot of people don't realize this, but Apple was seen as somewhat of a risky investment. I'll include a link to a newsletter post I wrote about this that includes more details. If you're interested, that link will be in the description. The key thing to pay attention to is, can Alibaba continue to exceed expectations? I am keeping my glasses like this so you don't get the glare like this. I think it makes me look more sophisticated, kind of like a bald librarian.